Well, recently it's definitely been about turning to the technology section, but there's always a place for the rest of the market, and there's always a place for companies that have a valuation that isn't quite as robust as we see in some of the tech stocks, and for companies that are growing themselves, they're growing their cash flow, doing the right things. The problem right now is that all of the enthusiasm and all of the attention is on that top of the market stack.
What do you make of all these IPOs coming down? We're going to get SpaceX hitting the market any day now with the roadshow. And what does that mean for the market? Is that a good thing for the market, or does it suggest that the market's toppy for getting some of these big deals and big valuations?
So I would say if I had a concern, it would be that all of these things coming to market, the enthusiasm is so exciting beforehand, and then the actual getting to market is not as enthusiastic. If this all goes well, I think it gives the market a whole other reason to be excited. But I do think that there is some question about what happens when you have that much money being absorbed by much later stage IPOs than we've ever seen historically, and at valuations that are mind-boggling, quite honestly.
What is it? I mean, we talk about valuations, but boy, the earnings came through. I mean, corporate America did their job this past quarter, and it was some pretty solid guidance given all the craziness out there.
And I think that that is one of the biggest things that is holding everything together, is the fact that money is truly being made. This isn't the promise of money being made. Money is being made. You can argue about whether or not some of the areas where pricing has been exploding because of shortages is sustainable, but it doesn't matter. In the near term, there's a trajectory, and that earnings growth is high. And that is what is helping a lot, because you actually haven't seen multiple expansion into this. You've seen earnings expansion where the multiples actually gotten a little bit smaller than it was a couple months ago.
My theme for the June 1 morning, we're busting out all over. Do you have any visibility to the earnings season starting roughly January 16th, 17th, July 16th or 17th? Fiscal year June, ending June 30. Wait a couple weeks, JP Morgan gets us started. Do you have any sense of what we're going to see?
I think you're going to see a lot more of the same in certain trajectories. Like I don't see what changes the technology picture. I think you may see the fact that you have inflation creeping in be a problem for margins in some places and in some industries. But in a lot of places, I don't see a lot of change in what's going on. I think the energy picture continues to be a big question. And the fact that oil prices could come down to this level, even though we still don't have a deal, I think you're seeing more slippage through the strait. And I think that there's an adjustment there, too.
Isn't that the big thing late last week is oil came in? Given the news flow, you're like, really?
Exactly. I mean, I don't know. It seems like the markets are discounting this all pretty calmly here. Do you want to look for value in this market? Because it seems like, boy, all the performance is coming from those tech names once again. Do you want to try to look to other parts of the market for value here, or do you just want to chase that performance?
I think, I mean, from our perspective, I think what you're looking for is a combination of, I want a good balance sheet, I want good cash flow, but I also want some growth. So, I mean, GARP is not even something we talk about anymore because there are no reasonable prices. But there is still growth to be had in places where people are overlooking it. And I think that there's a lot of areas that have been left behind, and I think you should start to see some of that catch up. I mean, healthcare space is one of them. There's a lot of areas where there's some really good rebounding growth we think is going to be interesting for the next year or so.
But on the valuations, the denominator's picking up because earnings, cash flow, whatever the denominator is so much better than anybody expected. Or even if you do what Arnaud and Harvey say in Financial Analyst Journal, which is forget about the ratios, just look at the absolute profit being made. The bottom line is it continues.
It continues. And all of the concerns that people had over, including us, over higher rates, over higher oil prices and margins, and how can margins continue to expand, they seem to be continuing to expand. Now, part of that on the tech side is some of the layoffs that we've seen. Whether or not that continues, it's hard to say. It hasn't been disastrous, but it's definitely been a trade-off between people and capital. And I think in some cases, that would be the worry going forward.
It seems like these equity markets, I mean, again, we're hitting new highs every day. Does that surprise you, or is it just simply a function of the markets are doing what they're supposed to be doing, which is discounting higher earnings, I guess?
They're discounting higher earnings, but there's also a momentum factor that's going on. And there's also a question of where else, so what are the explosions in emerging markets? They're all on the tech side too. So there is a question of, this is the biggest growth that you can see on a global scale. People are running into it, but there also is a lack of places and other places to put money, right? So there's a combination of things that are going on here. And right now that seems to be, you also get, you get the FOMO of people running in because they weren't there before.
End of March, Remember end of March, there was still snow on the ground. Coldest spring ever. End of March, Dow 45,000. We're now up record Dow 51,000. I still can't get used to that, Paul.
No.
Right now, a 10% correction, we would crater back to Dow 46,000.
Yep.
I just don't know what to make about what I learned in textbooks right now.
No,
I don't know how it fits.
No, but a lot of the bulls will come in here and say, tech is leading us higher, but the tech earnings are leading the tech stocks higher. So it's not really a valuation concern at this point. I don't know.
It's also, I think, post the financial crisis, a different correlation than we've seen historically. So you go back to some of the older correlations, and you realize that with so much money in the system, it's a different world right now.
This is important. Paul said the smartest thing I've heard all morning. Excuse me, Alexis. I meant it. Paul said the smartest thing I heard all morning. He said, the bulls. Mm-hmm. Are we bulls or are we unknowing and just along for the ride?
That's a great question. I think that there is definitely a lot of bullishness out there. I think there's a lot of skepticism, but the skepticism gets rolled over every single time. The dips get bought, and it becomes difficult to try to figure out a framework in which that doesn't happen because that recency bias is so high.